Welcome to the Trader's Edge. I'm your host, Steve Rhodes, and thanks so much for joining me, folks. I absolutely love being here with you, and I mostly treasure your presence here today. Now, my outcome, folks, is to help you to become a better money master, also to inspire you, but mostly to be able to lay the groundwork so that you can lead an inspired life. Because, folks, leading an inspired life is what it's all about. My personal outcome, and I hope it's yours as well each day, is always to be able to increase my skill level. So let's go take a look at one of those skill level tools that we all need, folks. This is called the true nature of courage out there. And each of you are more courageous than you give yourself credit for, folks. Now, doing what it takes, folks, doing what it takes to achieve personal success, it's more than really an exercise of discipline. You know, here when we take a look at trading the markets, we always talk about disciplines, A to B equals CD, retracement levels, candle patterns, but achieving personal success, whether it's in trading or anything else that you do in life, it's more than just an exercise of discipline. It is an exercise in courage. You know, and you absolutely have to have courage. That's why I call courage what? The priceless commodity out there. We're going to talk about commodities today. We're going to talk about gold and silver and light sweet crude. We're going to talk about currencies, the markets, but the real priceless commodity, folks, that is the courage, but mostly that courage that lives within inside you. No matter how successful you are, you always need to dig deeper and find more courage. You know, the Greek philosopher Aristotle, he said it this way more than 2,000 years ago, folks. A truly courageous person is not someone who never feels fear. I mean, how many of you out there have felt fear in your life? Maybe even yesterday. Maybe you'll feel it today. Maybe it's this morning. But a truly courageous person, he said, is not someone who never feels fear, but who fears the right thing at the right time and in the right way. And that's what we're going to talk about when we take a look at the markets. I don't want you to fear some of the terms that I use. Maybe it's Fibonacci numbers you don't understand, swing points or expansions of swing points. Maybe it's, it's saying, how does this math work? I don't believe in math. Don't fear the numbers, folks. Do not fear the patterns that are out there. Don't fear. If you're confused about something, the good news is you're just about to learn something out there. And you can always learn by giving us a call here at TFNN, 877-927-6648. Would absolutely love to hear from you. Remember, fear, folks, is false evidence appearing real. Do not live in fear, folks. So let's go take a look at these markets. Let's see what they're doing. Relatively flat here this morning. You've got the Dow futures up about 16 points or so. The ES Mini trade out at 1381, really unchanged. NASDAQ futures are really what is popping, if there is any kind of pop out there. NASDAQ futures up 8.5 points, so we'll certainly take a look at that. The Russell 2000 down about 0.5 point right now. King dollar pulling back 13 ticks right now, trading out at 82.73. You've got gold trading out at 16.23. That's up $4. You've got silver up 0.4, almost 0.5%, up 13 cents, trading out at 28.16. Light sweet crude unchanged out there. If we take a look at what's going on around the world, you've got the DAX selling off right now. That's what I've got on my screen here. So maybe Draghi said something. I don't know. But if we take a look at the screen here, you're going to see the DAX is up 17 points. The DAX is up over its swing point highs. Swing point high being the 6775.74 from July 20th, folks. It's trading right now at 67.88. May day high, so it's making a run. It's trading inside the May 2nd swing point, if you take a look at the DAX. And, folks, if you're not watching us on TigerTV, maybe you're listening to us on TFNN.mobi. That is the easiest way to listen on your mobile device. You can also view us on many of your mobile devices, your Android device, your iPhone. And so what you'd want to do, folks, is you can watch us on Tiger TV, or if you're listening to us on the radio, go to the homepage of TFNN.com, catch the archive of this show on Channel 9. Now, what you can see, the DAX here, just as we're speaking, has gone just slightly, let's just say it's down to about up 3 points here. And what the DAX was doing intraday, it's trading inside this May 2nd swing point. Now, the top to the bottom on May 2nd is pretty large. The high of May 2nd is 68.75.87. The low is 66.64. So it's got a pretty decent a wide price spread on that day. But what the DAX trading inside it, what the DAX is attempting to do here is to get up and over that May 2nd high. That would be that 68.75. It had the chance earlier before we got on the air. Don't know exactly what's going on out there. We're going to pay attention to these markets. The markets are going to tell us just simply by watching the chart patterns out here. But the DAX is one that you want to watch today. So coming into 11:30, you want to see how the DAX is closing. That will be today during the Kate Stalter show. Kate will be on between 11 and 12 today. Then from 12 to 1, we have Victor Jones with the option hour. Daryl Martin from 1 to 2. 2 to 3 is open, I believe, for the last day as we start going 9 hours solid. And then we've got the Ken Shreve show from 3 to 4 and Tom O'Brien from 4 to 6. So that is on the DAX. The DAX right now, has traded off just a bit, but really the DAX having doing everything it can to get over into that May 2nd high out there, 68.75. 87. Now, if we just simply take a look at the retracement, let's do that here. Let's take a look at the retracement off of its highs. We go back to March 16, 2012, when the DAX was up at 71.94. Now, you might say, hey, Steve, why are you paying so much attention to the DAX versus the U.S. market? Well, folks, the DAX here is really going to be, leading off, giving you some valuable information, especially if it gets up and closes above yesterday's high. Yesterday was taking on the swing point from July 20th. Yesterday's high is 67.96.61. As well, it'll give you information if it closes underneath this area. And so that is why we're paying attention here to the DAX. What you can also see on the DAX is it's up and above that 0.618 area. When you get up above, just like an elevator, if you're going to go to, you don't stop in the middle of a floor. And we take a look at floors out here inside the DAX. The next floor is up at 69.20. That's well above the May 2nd out there. And if you take a look at that 0.786 area, what you also have, you happen to have an open gap inside the DAX. That gap is from April the 4th out there. The top of that gap, 69.44. So until things change, that is what the DAX wants to do. And what is this all about? It's really all about what's going on inside the currency world. So let's go take a look at the currency world. Let's take a look at King Dollar. Has just gone pretty much flat here. If we take a look at the euro has these two different 2.618 butterfly patterns out there. And the pullback yesterday was really rather small. And when I talk about pullback, folks, I'm talking about from the low on the DAX, on the euro being the July 24th low when it got down to 1.20411. I'm going to go from that low to the high that was put in on Friday. And what you will see yesterday, I'll go ahead and blow this up on my screen here so you can follow along. It's easier to see here on Tiger TV. What you'll see is it pulled back beyond the 0.382 level. It closed really at the 0.382 level yesterday when the euro closed out at 1.22589. And this morning, it's trading up above that area. If all the euro does is a 0.382 retracement here, folks, that's going to set up a very large A to B equals CD. Why? Because when you only do a 0.382 retracement, I grabbed the wrong tool out here, but when you only do a 0.382 retracement, hopefully each of you have one of these wonderful rubber bands next to you. What I want you to understand is when you take this rubber band and you wrap it around your index finger and you just wrap it as far as you can until, it's like the blood circulation here is cut off. And if you only back it off 38% and you let that go, you're going to get a pretty good move out of there. And that move sets up more than a one-to-one A to B equals CD the majority of the time. So that A to B equals CD right now, just a one-to-one takes you up to 1.257 area. And if you do that, you're going to see a big push here in the markets. Now, that's, you got to all put your money on the euro. Not necessarily a safe thing to do, but just simply forget about what the vehicle it is that you're looking at. Just simply what you want to do is you want to pay attention to the chart patterns that are out there. And so right now, the euro has only pulled back into that 0.382 level, and that is what we want to watch. Now, normal pullback, folks, would be for the euro to move down into that 0.618. That would be the 1.21740. If you do that, you'll see pressure on the U.S. markets. That is nothing more than a normal pullback. At this stage, you've had a couple of wide-ranging bars to the upside. You had a bullish engulfing down here on July 25th. You had real nice confirmation that following day, and that is what is going on with the euro. Let's go take a look at our markets here. We'll go ahead and pull up the ES Mini. What we will see with the ES Mini is really it is trading inside a very narrow banded range. Hasn't given us really much in the way of clues to the upside or to the downside. You'll see this is a 30-minute chart here that we're looking at, and what you'll see is you'll see two black lines that I've got drawn across here. Those black lines being the close of Friday. That's the top one. The close of Friday on the ES Mini was at 1382.50. You'll also see the open of Sunday evening. In the futures market, you had the ES Mini open up at 1379.25. You'll see there's not much fluctuation to the top side or to the bottom. What you will notice if you're watching on Tiger TV is you will see all kinds of Fibonacci numbers being hit as it makes its move up and down, as it does a normal breathing pattern. The first move to the upside on the ES Mini was a 1.272 expansion. You want to pay attention to 1.272 expansions. You want to when you're taking a look at a chart, even when you're looking at a short-term chart like this on a 30-minute, you want to pay attention to where are the expansions happening. Are they happening to the upside? Are they happening to the downside? And then with regard to retracements, where are they happening? Well, you can see ever since that 1.272 expansion here, coming into 10:30 on yesterday, you can see that what it's been doing is really contracting. It hasn't been able to expand beyond that. But to the downside, it also is not expanding. A really tight market. I wonder why, folks. 877-927-6640. Give us a call. We'd love to hear from you.
Yeah, it's always better when we're together.
Kate Stalter's exciting newsletter, Low Price Leaders, has just launched, and now is a great time to get a 2-week free trial. Every Wednesday afternoon, Kate sends out her weekly newsletter to her subscribers where she focuses on small-cap stocks with market caps under $2 billion, as well as low-priced equities with share prices ranging from $5 to $12. Kate tracks a variety of stocks with a combination of strong technical support and solid fundamentals. Many of the stocks featured will be recent IPOs. These newer issues are often some of the biggest price gainers in the market and provide an excellent opportunity for substantial gains if timed correctly. You can catch Kate Stalter live on Tiger TV with her small cap roundup every Tuesday and Thursday at 11 a.m. Eastern Time, and visit TFNN.com right now to get your 2-week free trial to her brand new newsletter, Low Price Leaders, while locking in the low introductory monthly rate of only $37.50 per month, almost a 50% discount. Act now. With the launch of Tiger TV, TFNN has brought our programming to the next level. With Tiger TV, you gain access to each host charts and computer screen as they host their daily stock program. Whether it's Tom O'Brien, Steve Rhodes, Basil Chapman, Ken Street, Kate Stalter, Dave White, Larry Pesavento, or Victor Jones, you can catch all of our technicians hosting their programs live and archived on Tiger TV for your viewing pleasure 24 hours a day, 7 days a week. If you haven't checked out Tiger TV yet, then visit TFNN.com today to see what you're missing.
Millionaires are made every day. The fact is, living your dreams is possible. Someone, somewhere is going to get rich. My recommendation is, let that be you. Each day, someone is making the decision to better themselves and creating a plan to fulfill their financial dreams. Let that be you. The key to turning dreams into reality is to take massive action. Let that be you. I'm Steve Rhodes, co-host of the Money Master Show with Tom O'Brien, seen daily at TFNN, and I can help you with your journey to great wealth. I'll show you how to create the ultimate financial edge, a set of tools, insights, and strategies that are part of my daily newsletter service, Mastering Probability. You'll have direct access to me by phone, email, and my private library of trading and investing secrets for 30 days with an unconditional money-back guarantee. I'll take your trading to the next level. Click on my name, Steve Rhodes, on the homepage of TFNN.com and turn your dreams into reality. Mastering Probability, folks. Let that be you.
Are you looking for a precision edge in the market? Something that can stack the odds in your favor? Then look into Larry Pesavento's new trading newsletter, Patterns, Profits, and Peace of Mind. In each weekly issue, Larry explains what's going to happen in the markets based on the pattern he sees developing and gives you actionable trade ideas based on those patterns. Plus, you'll get his detailed analysis on a variety of markets and sectors, including stocks, treasury bonds, the gold market, oil, the dollar, the forex market, and more. And you'll get the Technical Corner segment, which is a short, powerful weekly training session on trading. you'll get access to all the patterns Larry is seeing in the markets, plus the Astro Harmonics and powerful Bradley stock market model that Larry utilizes for less than $5 a day. An extremely potent combination that will give you just the edge you've been looking for. Try patterns, profits, and peace of mind absolutely free for 2 weeks. Go to TFNN.com and click on the free trial link at the top of the page. That's an $85 value, yours free when you register right now. Get Larry's patterns, profits, and peace of mind and get the edge you've been looking for.
Many of our new listeners have heard about the Tiger's Den, but wondered, what exactly is it? The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of your favorite TFNN shows, plus see all the charts as they happen live during those shows, and have access to archives of those charts. You can test drive the Tiger's Den absolutely free for 30 days. It will greatly enrich your knowledge of these markets. Details on the Tiger's Den are on the front page of TFNN.com. This segment is brought to you by TFNN. Test drive all the newsletters for free at TFNN.com.
It's always better when we're together. Yeah, we'll look at them stars when we're together. Well, it's always better when we're together. Yeah, it's always better when we're together.
It absolutely is, folks. Welcome back. Let's go start off by taking a look at the NASDAQ futures. I did mention that we were going to go ahead and take a look at that. Now, what you can see here in the NASDAQ futures, you can take a look at yesterday's action. Yesterday, you had a high out there of 2657.75. What was it doing? It was going against the swing points out here from July 19th and July 20th. The highs there being 2657.50. 2658 being the high on July 19th. What were those two going against? Those two were going against the July 5th. So what you can see here is really having and what you saw here on the July 20th candle, that was a bearish engulfing candle. Bearish engulfing candle was firmed up and confirmed with the following trading session. And so what you can see yesterday is that price moved right into an area of resistance. The top of the bearish engulfing candle is the 2658. It was able to get up to 2657.75. Right now having a little bit of an inside day here, but did close, it is staying here, hovering up at the top of this range here. And you can see the range being up at that 2658 level, and the lower part of the range here, the more conservative, would be down in the 2516. So really a pretty decent trading range as we take a look at it. And we are coming in to a full moon. That full moon is Thursday at about 3 a.m. ephemeris time. So that's Wednesday about 11 o'clock or so on the East Coast. So hopefully it's going to be a beautiful full moon out there. I know that all of us here at TFNN will be out there howling at that full moon. Now, if we do take a look at the weakness here, or we take a look at what else is going on in the NASDAQ futures as it gets up to these levels, if we just simply go take a look at a retracement off of the high established April 3rd, when it traded up as high as 2791.50, and all the way down to this important low here on June the 4th. June the 4th, the world was falling apart. That is a day where you had a P-index day, you had a full moon, you had a super, well, you didn't have a super full moon. But you can take a look at just simply going from the swing point high to the swing point low. You'll see you're also in that 0.618 retracement area. So that is on the NASDAQ futures, and we'll see what this wants to do. A breakout above this line, above that 0.618, above yesterday's high, would set the NASDAQ futures up towards the May. Let's take a look at where is May 1st here. And this is, you can see how the weakness here is in the NASDAQ futures. Of course, we know there's a weighted structure with the Apple being about, I think it was around 14 or 19%. I think it's around 14% out there. We know that Apple is struggling. Of course, Apple is trading up this morning. We'll take a look at where Apple's trading in a moment. But what you can see is the May 1st area inside the NASDAQ futures is up on the May 1st, in the May 1st area. The actual 0.786, 2715, and the low of May 1st is 2710 up there. So the NASDAQ futures showing you some weakness out here. If we do take a look at how things are trading here in the pre-market, you've got Apple closed out at 595.03 right now. They're trading up at 603.50. So what is that? About $8. So they're trading up at $8 here in the pre-market. You've got Cirrus Logic, C-R-U-S, Cirrus Logic. Closed out at $29.84. They're having a nice pop. They're trading at $36.50. Let's see if they had some earnings release out here. They did revenue. Let's see. Where's their revenue? Net income, $6.9 versus $9.2 million. Net revenue, $99 million versus $92.2. Yet this is popping. Must have given some good guidance out here. Again, closed out at $29.84, having a nice pop, trading out at $36.04 this morning. We can take a look at Accretive Health. AH is the ticker symbol. This here trading out at $13.15. They closed at $10.01. Let me see what the news behind this is, if I can locate any. And I can't. Let's see. They entered into a settlement agreement with Minnesota. So they have obviously finalized some litigation out there for wrongdoing. Don't know what they were doing. No admission of liability of wrongdoing, of course. So they've got that settled, and the market is liking that. To the downside here, Coach, C-O-H. That is a IPO from within the last 6 months. They closed at $60.58. They are getting hammered, down to $49.35. What was their deal here? They must have released earnings. Net sales, $1.1 billion versus $1.03. Earnings per share, 86 versus 68. Let's see here. What did they do on the net income side? Net income was $251 versus $202. Coach must be giving some pretty poor guidance out there. They are getting kiboshed this morning. Again, they closed at $60.58, trading at $49.16 right now. Humana Health right behind them. They closed out at $70.55. They're trading down at $64. Seagate also to the downside, closing at $30.43, trading at $27.95. 877-927-6648. We'll go see how these markets are going to open. Give us a call, folks. We'll be right back.
Yeah, it's always better when we're together.
In quiet markets, investors search for new trading opportunities. We'd like to introduce you to a new product that provides opportunities even in flat markets. Nadex, the North American Derivatives Exchange, is a new and innovative Chicago-based exchange registered with the Commodity Futures Trading Commission, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their trading platform. Nadex never charges a fee to use their platform, which even includes real-time charts and full customization capability. Nadex's unique short-term binary options allow traders and investors to capitalize on strategies even when the underlying markets are quiet. Nadex's innovation has allowed them to come up with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's Nadex.com, or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors. Would you like a personal update from Tom O'Brien as to what equities he's trading and what his daily trading plan is before the market opens each morning? Every market day, Tom O'Brien sends out his daily newsletter, Market Insights, to hundreds of subscribers that rely on his daily recommendations when it comes to navigating these highly volatile markets we're dealing with. As recently as May 21st, Market Insights subscribers closed out all 5 open positions for a combined profit of over 68% in one day. Profits ranged from 6.5% to over 24%, and all of these trades had been initiated within the previous 30 days. Now is the perfect time to get a 2-week free trial to Tom O'Brien's explosive trading newsletter, Market Insights, an $85 value. Tom breaks down the market each morning with his market take and provides trade recommendations including precise stops and target profit zones, leaving nothing left to guessing. Log on to TFNN.com today and sign up for your 2-week free trial. Make sure you're a subscriber the next time Market Insights subscribers close out multiple winning trades. Take action and sign up for your free trial today. If you're an investor looking for a great weekly investment newsletter, then now is the perfect time to try out Ken Shreve's Ultimate Growth Stocks. Every Tuesday, Ken breaks down multiple sectors in his weekly newsletter, Ultimate Growth Stocks, with a full in-depth report including specific trading recommendations within his model portfolio, charts, sector analysis, upcoming economic data, along with intra-week trading updates on newsletter positions whenever the market dictates. Right now, you can receive a full month, that's 30 days, to evaluate Ken's newsletter free of charge to see if it fits your trading plan. At less than $75 per month, Ken provides you with his expert trading advice that can pay for itself in no time. Take advantage of this great offer by signing up for a 30-day free trial to Ken Shreve's Ultimate Growth Stocks today. Don't let this offer pass you by. Visit the front page of TFNN.com and sign up now.
What type of investor are you? Conservative, moderate, or aggressive? No matter your investor personality, your overall portfolio should reflect your financial goals, time horizon, and your risk tolerance. Help ensure your portfolio is appropriately invested with an asset allocation plan from Morgan Stanley Smith Barney. Simply picking the right stocks is not enough. Research has shown that choosing the right proportion of stocks, bonds, and cash is essential to the success of your long-term investments. Morgan Stanley Smith Barney believes that a carefully selected portfolio can lower volatility and increase investment return potential. Find out about what asset allocation and a Morgan Stanley Smith Barney financial advisor can do for you. Call Angela O'Brien, First Vice President and Certified Financial Planner of the Clearwater, Florida branch at 727-441-6108 today to discuss your personal financial needs. Asset allocation does not assure a profit or protect against loss in declining financial markets. Investments and services are offered through Morgan Stanley Smith Barney, LLC. Member SIPC.
This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
It's always better when we're together. Yeah, we'll look at them stars and we're together. Well, it's always better when we're together. Yeah, it's always better when we're together.
Races. You got the Dow down 16 points. S&P's basically flat, just slightly negative. The composite up 5. Small caps flat as well. Microsoft up down 15 ticks right now. Intel up 14. Google up $2. Cisco up 13 cents. Apple leading the charge dollar-wise on the way up almost 2%. Up $11 here right now. IPG Photonics right behind them up 15%. They're up $7.50. You've got Cirrus Logic CRUS up almost $6. That's up 19%. Cummins Inc. CMI having a good day. They're up 3%. Decretive Health here after the legal litigation issues being solved, up 33% this morning. We'll take a look at that. Liquidity Services, LQDT, also in the IBD 50, I believe they're up 8.5%. Excuse me. CIE, the ticker symbol for Cobalt International Energy. They're trading up 11% this morning. On the downside, Coach, I apologize. I was saying Coach and thinking of Michael Kors. So Coach is not the IPO that I was thinking of. We are going to take a look at Coach. They're trading down 17% this morning. Humana, which is off $10. Humana's off about $6. That's down 8%. Cafe Press, PRSS. They're taking it in the shorts here, down 41%. What did Cafe Press here? Now, I know that's a IPO here. Cafe Press Q3 revenues. Now, their Q3 revenue, net revenue 47 versus 37 million. That's not too bad. Net loss of 260,000. That's not 260,000 versus 129. Cafe Press, folks, they're the folks that do customized T-shirting and so forth, and their real season is not until the fourth quarter of the year. So this would be a slow quarter for them. I would expect this would be a slow quarter for them. But we're going to go take a look at that because that stock is taking it in the shorts here. Ralph Lauren, RL, they're down about 2%. LPLA, the ticker symbol for LPL Financial, they're trading down 12% right now. So let's take a look at Cirrus, CRUS. They are having a fine, Cirrus Logic, they're having a fine day out there. They gap up again here. They've got several gaps. So question becomes, is this an exhaustion? Well, let me see how many gaps they do have. First, let's take a look at the stock, see what it's doing. So this gaps up this morning, trading out right now at 35.95. You've got good volume in it for 7 minutes of the trading session. 2 million shares out here. Last time you saw a sign of strength and a gap up was April 26th with 15 million shares. So let's pull this back here on the daily chart. So interesting. We're going to have a little divergence out here. But what you do have is what I'll call a third gap. And you can see that this gap is the largest gap, both in dollar-wise and certainly percentage-wise. And this stock has a number of gaps in it. But on the way up here, what I would take a look, somebody probably have to do the math here, but if you take a look, the first gap goes back to January 9th, so the January 9th to January 11th gap out there. You then had really kind of a multi-gap out here. The first gap, the next gap being April 24th, gaps up both on April 25th as well as on April 26th. So I would take a look at the April 24th gap to the April 26th gap. You might want to do it on your own chart here. And I'm not going to do this here during the show, and take a look at the math. Probably I would use the larger of these two just to compare that to today's gap and as well as the percentage. The reason why I said divergence here, folks, is you are up over swing points most certainly with volume this morning. The swing point, most recent swing point is June 18th. That had 4.5 million shares, so it's going to have more than 4.5 million shares today. If we take a look at the monthly chart, let's go take a look at this, because this thing here had built a lot of cause going back into 2004. Let me see if I have even more data on this. Maybe that is when this thing came. There we go. So we do have more. Wow. Now that's okay. Now we get a little bit better picture of what Cirrus Logic is doing. Now this, folks, is a stock that in September 1995 was trading out at the $61 level. Now, the A point of the AB equals CD that this is working on here this month was all the way back down at $2.16. $2.16, folks. Hopefully, here, we could absolutely find shareholders that rode this stock down in 1995, probably from the $60 level down to $2.16. So right now, this thing is getting into, this has some resistance. You've got some major bearish engulfing candles as this thing made its highs out here. Let's see, on the monthly chart. Didn't make a bearish engulfing on the monthly chart, but it sure was a piercing candle out here. The highs that that this is coming into go back to October of 2000. The high being 47.67. You trade at 36.09 right now. Now, if we do take a look at the current A to B equals CD structure on the monthly chart, you're not going to see a bearish candle at all. You're not going to see a red candle on the way up. What you're also going to see is price traveling on the inside path here. Now, obviously with the gapping up today, getting beyond that, the 1-to-1 A to B equals CD on Cirrus Logic being 35.84. So if this is not an exhaustion gap, what Cirrus Logic will do is trade up into the 42.15 range. That would be a 1 to 1.272 A to B equals CD. As it does that, it's going to be getting much closer to making a 100% move of a move. That's on Cirrus Logic. Let's go take a look at some of our other stocks out here popping and dropping. Let's go take a look at Humana, HUM. HUM was struggling out of the gate, not fighting back some of its losses here this morning, but this is its second gap down. Really, well, this thing has got a number of gaps. But let's go see what Humana is doing. Humana trading back into the consolidation area from August of 2011, as well as in October of 2011. So let's go put this on a little bit longer-term chart. Let's put this on a weekly chart, a little bit easier to visualize. So it is trading underneath the swing points here that go back to that week of October 2011. That had 12.5 million shares, and the low there is 65.20. You're traded at 64.74. So if we take a look at the volume, and this is got an A to B equals CD down. Let's go see if this is a confirmed A to B equals CD down here on the weekly chart. And we can see the retracement is pretty narrow. So this does have more work to the downside. Let's go take a look at the volume of the week of May 25th, 2012. Looks like 6.6 or 6.3. Give me a minute here to go back. 6.6 million shares. And let's see, as it came through there, you got a confirmed A to B equals CD down. That was last week. 11.5 million shares on the way down. That sets up a 1-to-1 at 58.66, but more likely 52.49. Now let's come back and take a look at volume in this thing. Last time this had any type of volume that will act as support, you would go back into the January 22nd, 2010 area. That's 52.66 to 49.30, and we said 52.47 was your 1 to 1.272 A to B equals CD on Humana. What you're going to need to see here as you take a look at the swing points that it's going against, the swing point for October 7th is 12.5 million shares. So you want to see it get below that on more than 12.5 million shares for the week. as well as it's got 19 million shares from August 12th. So it's going to find a little bit of support here. You close below it on lighter volume. That certainly gives you the 58.68 level. On larger volume, that's going to bring into play certainly that 52.47, maybe 44.54 level. That's on Humana. HUM was that ticker symbol. Let's go take a look at Coach, and then we'll take a look at Cafe Press. So COH is the ticker symbol, and what Coach is doing is Coach is coming right back into its breakout. And this thing broke out, folks, on October 25th, 2010. Did that with 13 million shares. That 13 million shares, the price point on that was $47.39. It still has a open gap. The actual top of the gap from October 26th is $47.39. As it came back into the let me hold on. Maybe it did get closed here. It's going to be easier if I just simply put a line tool across here. That way I don't have to rely on my eyesight. Okay, it looks like it did close that gap. Let's see. Make sure. October 25th, daily chart, 45.64. 45.64. And what does it get back down to? It gets down to 45.76. 45. Come on. 45.70. So it does have just a slight little open gap out there. That is on Coach. Now, if we just simply take a look at the volume back here at the lows coming into the August 11 time frame, the volume that you had here, and that's what it's really trading into right now, is 9 million shares. Now, today, what this thing has done, this thing has already done in its trading here. Let me just blow this up here. It's going to be easier for me. Has already done 6.5 million shares. So it has volume to the downside, and it certainly is gapping down and taking out the July 12th lows, 53.26 with volume. So I don't see this at the moment here as a real buying opportunity. This thing wants to come back and at least test that gap area again where you've got the lows in August of 2011. Let's go take a look at Cafe Press, PRSS is the ticker symbol there. So this will be a fresh chart. I have not looked at this. Gapping down, trading out at $7.93. So let me just refresh this chart. This thing here, so I guess we've been talking a little bit about Facebook. Well, somehow that's because Facebook had all the press out there. But they didn't have the Cafe Press, folks. Cafe Press, take a look at this. Cafe Press here, as an IPO, does this on March 29th, gets up to a high of 22.69, closes out at 19.03. This thing, so every single shareholder, with the exception of a few that have bought this morning, are in the red. That is going back to March 29, 2012. These guys here performing even worse than the Facebook offering. And I suppose if we take a look at ABCDs on this thing here, if we take a look at a worst-case scenario, let's see what this price is out at. And what I would do is I'd start at the high from the IPO date, that being the price there of 19.18. This probably puts them out of business. No, it takes you down to $5.22. So Cafe Press, not a place to put your money. They do provide a good service, though, but don't put your money in that stock. Let's go take a look at what else we have flying out here. So you've got IPG Photonics. Let's go take a look at that chart. They are popping to the upside. They are trading up 19%, IPGP. So they're trading up 19%, trading out at 57.60 right now. That is going against a most recent swing point here from May Day. So it's testing its May swing point. That only has 2.1 million shares. It is going to be able to take that out volume-wise, already having done 574,000 shares in the first 15 minutes. Now, the high of that swing point is 57.51. You're trading at 57.60 right now. It has gotten up as high as 57.77. So it's gotten up above the May 1st swing point. Gets up above that, stays there. What it will do is go make a 100% move going all the way back to February 17th when it traded as high as 61.18. Let's take a look at this a little bit, pull this back a little bit further here. Take a look at So here is a stock that did come back to its breakout area. Let's see here what kind of volume this thing did. Let's put this on a weekly chart. So let's take a look at this on a weekly chart. This breaking out the day of February 10th, 2011. So put on a weekly chart, and we'll take a look at here's where the breakout was. That breakout, February 11th, when it did 3.8 million shares. As it came back in there, came back in with 1.5 and 1.4. So that is a nice test of a breakout. Let's draw the line across here. And the real breakout that I would use, which if you're taking a look at this chart at home, you can see the high volume, the wide price spread, as well as accelerated volume on the week of February 11th. I would use the candle before that and say that's where it really broke out of. So that would be the low. That would be the ultimate in test. Now, the low of that February 4th area is 33.61, and that did 1 million shares. So as it came back into that 1 million shares to 1.5 to 1.4, but again, you kind of want to offset it against the volume there from February 11th. So that volume being 3.8 million shares. So it's nice the way that this thing here actually is set up. And then you had a nice follow through as this thing came off of those lows there and really setting up this consolidation range. And again, this is an IPGP. This thing here came off with conviction. It did that the week of January 13th. So let's take a look at some of these other high volume bars out here, see what we have. You have a high volume bar without any kind of price spread the week of March the 2nd. You've got a high volume high that created the swing point that it's now going into from the week of May 4th. On the weekly chart that had 5 million shares in there, and again that high was 57.51, and that's what it is contending with here this morning. So at worst case, this thing is in a consolidation range, and the low of that consolidation is going to be the June 24th area, the low of 60.74. That had 5 million shares. The last time that was hit out here was in February with 3.9 million shares. So that's going to be your area of consolidation here on IPGP. So we take a look at the markets here right now. You've got the Dow off 22, S&P's basically flat, down 58 cents. Composite up 10, small cap up 2.7%. You've got Microsoft trading up 6 cents, Apple up 12, Coach down 9. 877-927-6648. We'll be right back, folks.
Yeah, we'll look at them stars and we're together. Well, it's always better when we're together. Yeah, it's always better when we're together.
You take a hands-on approach to managing your investments, and whether you're bullish or bearish on U.S. Treasuries, the ETFs from Direction Shares are there to help you magnify your perspective. Bull ETFs for a rising market and bear ETFs for a falling market. Direction Shares gives you the tools for both sides of the trade. Discover how we can help at DirectionShares.com today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction Shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction Shares. To obtain a prospectus or summary prospectus, please contact Direction Shares at 800-851-0511. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors employing dynamic strategies. Investors in the fund should understand the consequences of seeking daily investment results, understand the risk of shorting, and intend to actively monitor and manage their investments. Distributor Foresight Fund Services, LLC. David White's newsletter, The Technology Insider, is focused like a laser on finding the next big things in technology. If you had invested only $10,000 in Microsoft in 1986, you'd have been a millionaire by 2000. Disruptive technology like Microsoft's is the key to these massive long-term profits, and the Tech Insider is the vehicle from TFNN to capitalize on these opportunities. This is the go-to newsletter that identifies, monitors, and profits on mostly little-known cutting-edge companies with great long-term prospects. David's experience is as an inventor of Emmy-winning animation products for TV and Hollywood that propelled a company public. Match that with 14 years as a full-time trader, and he's uniquely qualified to guide you through the light-speed world of ever-evolving high-tech. If you're ready to ride the next big technology bull market for less than $40 per month, log on to TFNN.com and get your 2-week free trial to the Technology Insider. Get in on the ground floor of the next big thing today.
Put the power of the Chapman Wave methodology to work for you. No matter what market you trade, what time frame you trade in, or your trading style, the Opening Call, Basil Chapman's daily market newsletter, is bursting with the information and trades you need to become a more successful trader.
I've been using Basil Chapman's Chapman Wave methodology for several years now. His Chapman Wave can be used for any time period for not only equities, but futures, currencies, commodities. I've been also a subscriber of his Opening Call, which I find an invaluable tool to help me analyze the potential of the market each day. He gives you opportunities to go short and long. It includes recommendations on stocks. I strongly recommend people using the Chapman Wave, and I very, very strongly support the use of his Opening Call.
To find out more about Basil Chapman and his Chapman Wave methodology, and to get your 2-week free trial of the Opening Call, a $64 value, visit tfnn.com today.
In just December of last year, the price of gold was down over 10%. In today's highly volatile gold market, you need someone in your corner that understands the complex relationships that exist within the price of gold, as well as within a variety of gold equities. Whether it's the South African gold miners and knowing how the Rand-dollar relationship will affect their bottom line, or understanding how John Paulson's $5 billion trade in the GLD can move the market, Tom O'Brien gives you the direction you need to become a better trader each week in his newsletter, The Gold Report. With over 20 individual equities covered and almost another 20 on the potential watch list each week, in addition to covering the XAU, HUI, GLD, and dollar, The Gold Report is a great source for any trader that is looking to be diversified in today's volatile gold market. For your 30-day free trial to Tom O'Brien's Gold Report, log on to tfnn.com today. Don't miss out on this great offer. Act now.
Catch Tom O'Brien and Steve Rhodes as they teach you the art of mastering money when it comes to trading and investing. The Money Masters, next on TFNN.
It's always better when we're together. Yeah, we'll look at them stars when we're together. Well, it's always better when we're together. Yeah, it's always better when we're together.
Welcome back, folks. We got the Dow off 21, S&P's off 1 right now. King dollar back 28 cents, 3 cents, 3 pennies right now. Now, important day in the markets here from this perspective. If you take a look at two indexes out there, the S&P and the Dow, which you're going to see yesterday, maybe many people might overlook this, but really important. If you take a look at the candle formation that occurred yesterday, you've got doji candles, 2 doji candles. And doji candles have way more meaning when they occur at the tops and the bottoms. In this case here, we're at market highs versus market lows. In this case here, you had the S&P. You can see it certainly is in an uptrend. There's no denying that it is in an uptrend, just simply making higher highs and higher lows. Now, what the S&P is attempting to do is to get into the May 1st low. That May 1st low is 1395.73. It made it all the way up yesterday while it was making that doji candle, made it all the way up to 1391.74. So real close out there. And where the market closes today, or certainly over the next 2 trading sessions, but I'd say as it closes today, is going to give you a pretty good indication of whether or not this doji here represents that basically the market is tired. That's what it is saying. The market is tired. We know we're coming into a full moon here over the course of the next couple of days here. That typically identifies a change in trend. It has identified, both the full and new moon have identified changes in trend here the last 5 of 6 times. So you want to be paying attention to that. So yesterday you formed a doji in the S&P 500. That automatically is a sign that the market is tired, and where the market closes today will be a very telling signal. If we take a look at the Dow did the same thing. Now, the Dow probably more important than the S&P 500. Why? Because the Dow has been the market leader out here, and so this is the monthly chart. Let's go ahead and change this here to the daily chart, and we'll see the doji candle that was formed here as well. Now, in the case of the Dow, what the Dow is also trying to do is get into that May 1st area. Will it have the energy to get up into that area below, was 13,174. It got up to a high yesterday of 13,128. So 50, a little bit less than 50 points away. Should be easy for it to make that move. Of course, right now, trading down 26 points. So this doji candle, folks, is absolutely saying be cautious out here. If we take a look at, just out of curiosity, what are the expansions of swing points here? Let's go from the swing point of July 5th. So if we take a look at the swing point from July 5th all the way down to the low that was established here on July 12th, you'll see also yesterday it was just slightly above a 1.272 expansion of those swing points. If you take a look at the retracement from the high of May 1st all the way down to the low of June 4th, what you will see is you are also at that 0.786 area. So pay attention to the Dow. Pay attention to the close of the S&P 500 today. I believe that they will be providing you with information on the ETF side of life yesterday. What you also had was, if you take a look at the Qs were testing the highs of July 19th. If we take a look at that, the high of July 19th was 65.31. Yesterday you got up to 65.31. Yesterday 37 million going into 53 million. Not enough energy to get up and over. Of course, right now you're still trading inside that swing point from July 19th, so the Qs have also not given you any information that it's ready to give up here just yet. And of course, that is because you got Apple trading up $11 and change. Stay tuned, folks. Tom and I will be up next on the Money Masters Show. Then we go to Kate Stalter, Victor Jones, Darryl Martin. Lunchtime from 2 to 3, Ken Shreve 3 to 4, and the Tom O'Brien Show 4 to 6. Thanks for being here. Have a great day, folks. See you in a few, or see you in the morning.
Yeah, we'll look at them stars and we're together. Well, it's always better when we're